The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And I did manage to do a Steve show earlier on, the first hour. Steve usually does a fabulous show, 9 o'clock till 10. Most days he does 9 to 11. Friday is different because Tom and Daryl get on with the Natives trading platform, discussing it. And I have to tell you, that was a great show. So let's do this. Let's just run the numbers. The E-minis are 4.50 in a potential leg F/C in the 120-minute chart with the pattern that I call the Chapman wave stalk leg formation. Leg, body, here's the neck forming. There should be a head made, that is the top, and it should come right back down and test the 1951 to 1949 area sometime in the 120-minute bar, that is. So what I want you to do is this. I had a couple of questions, a couple of emails that came in. Let me just quickly check. Go out for dinner. No, that's not the one. Okay, we've got... Yeah, this is one that I got earlier on. I didn't have a chance to get to it. So the question is, will I look at UNP and UTX? Okay, absolutely, because they're kind of key metrics for what I look at in the market. Here's what I'm looking at. I'll run the numbers first. The Dow is up 48 at 16,970. That means, let me quickly go to this chart, that the Dow has now made a new all-time high. That to me is really important because what we're looking at is purely, these little white candles here with little momentary doji stops on the way. Because of the move up, it is options expiration, and I do see some signs that maybe the options players are trying to squeeze all the puts, the premium out of the puts, that there might be a late day sell-off. That's okay. You've made the new high. What it does, and this is very important, is it makes the weekly chart of the Dow. Let me just go there now, and I'll go through the numbers one by one. INDU. So this goes to a leg alternate wave count A, B, C. Now this could be in the daily leg D. So we are still getting close to some kind of a resistance area, although when you're in all-time new territory, what's your resistance? The sky's the limit. Okay, so the D in the weekly, I have the same pattern with that for that stalk leg formation. It's actually more like one of those propeller shafts. And it's going in leg D because now all the indices have gone to higher highs to, yesterday and today. That, to me, speaks of inner strength in the weekly charts, and we'll have to wait all of next week to see if there's any pullback of significance, number one. Number two is... in looking at these markets, what we want to be configuring all the time is how are the technicals. Well, in the Dow, weekly technicals are very strong. In the daily, and that's the larger tight, and the monthly is very, very strong at this moment. In the daily, there's an improvement in the stochastic and the MACD. But I'm always a little wary that this pattern with the fast-moving average and the MACD can make an M pattern. And that says we've got limited upside in price and time if the MACD doesn't expand more and the stochastic doesn't get above 80%. Then it's going to be watch out, be very careful. Now when we're looking at the SPX.X, that's the S&P 500, a breakout. If I use that alternate wave count, this is either an F or a brand new leg B in the daily. That is very positive. If it's a B, and the MACD and the technicals are looking quite strong, very strong actually. And the daily, the weekly is approaching the up channel resistance, and that channel resistance is right there where we are right now. In fact, next week, if the S&P goes into the 1873 area, it starts to break that particular resistance. So this is a very important moment in terms of saying, all right, now let's look at whether or not we're about to get a pullback. And in that regard, I need to look at some other sectors that are very important at this particular time. I'm also looking at GE, IBM, Triple M, and UTX, my Dow Quartet. Now, when I'm looking also at the NYA.X, this is very important. Whoops. NYA.X. That's a New York Stock Exchange Composite Index. It has broken out of the up channel. It's not an up channel. It is actually an inside track resistance level on the weekly, and the stochastics at 95%. MACD is very strong. Monthly looks really good, and that has some resistance going into the 11,183 area, and it's trading at 11,022. The S&P was up 4 at 1963, up 0.22%, and this is up 0.18%. The Dow's up 0.31%, a little bit stronger today. But in the wave count, in the Chapman wave from the lowest, most identifiable low bar, that was the low of 10,518 on the 15th of May, we have, in fact, A, B, C, D, and this is an E, unless it's recycled here, and I have to call it an A. But at this point, there's nothing really. The lettering is merely perfunctory. I'm looking at really good price movement with really good technicals. When I look at the GCQ 114, that is gold. Gold made a nominal new high in leg C. It should still go to D. And what's the problem? The problem is that 200-period exponential moving average. What a beautiful indicator this is. It failed to cross above it and on the 14th of April. It broke under it on the 19th of March, and has refused to close above it. Even yesterday, it couldn't close above it. It closed at it. So that tells me gold is acting very well, that the 200-period moving average could be a consolidation area just after this big move, and that's where we get the test. A close below 1285 will negate all the strength in gold, and a close into the 1330 area would be very positive. The weekly so far is a nice candle, and silver is doing what? Silver is at this particular point, let me check that out. Silver is... Where did it go? Silver. Silver is up 0.22 at 20.87. Gold is up itself. It's up 210 at 13.16. Now, this is going to be very interesting. Why? Because we've got the TLT, the Lehman 20-year T-bond fund, and it's holding quite nicely at 111.38. But based on the Chapman wave methodology, it made a lower low to 110.74 yesterday. That's leg C, maybe trough C this morning. The MACD is just attempting to stabilize, and there's a positive divergence in the stochastic rising, price coming down to a lower level. Going to watch that closely, but it is underneath the up channel resistance, what was support, now it's resistance. So 113.50 would be where bonds say, hey, we're ignoring everything. We're just going to go back to the upside. I'm thinking that there's a period of rest, just a sideways move in the TLT. It holds support in the 109-ish area, and it tries to get to 111 to 112 resistance, and it just stays there based on the weekly chart. Just doesn't do very much. Just real quickly, the dollar is up 10 cents at 80.42, and I'd like to go to our first caller. We've got Dan in North Reading. Dan, how are you?
No.
Hi. I just heard the line. Hi.
Hi, Basil.
Yes.
It's Dan from North Reading.
Yes, Dan. So the question is?
Oh, well, I got into this, I don't know, last week, I guess now, and obviously got this nice pop this morning. So
this is CarMax, KMX, trading at 52.73, up just a little bit. It's up 16.5%, up 7.45. That is fantastic. So now explain to me, what was your reasoning for getting into it?
You know, mostly I sold my car to them a while back, and I kind of liked their little process, and
Well, that's
was
important.
just looking for an opportunity to get in, and then I decided to go in a little while back. I didn't expect this nice little bonus, but so now I'm wondering if I should get out or take some off at least.
No. I looked at this. I saw the pop early this morning, and I checked out the news, and they had much better earnings than expected. Between that and I shook my head and I said, Basil, well, actually, I usually joke because I usually use the American way of saying it. I say, Basil, what are you thinking? Because I've been discussing the return of the American automobile industry, and surely AN, which is AN, I remember symbols, I don't always remember the name, AN is AutoNation, has been doing unbelievably well, and these are the guys that are going to benefit. So AN has popped, it's up $1.53. I think that's a sympathetic pop because there was no news for it. It's gone into, I don't know whether there's an F or a brand new A in the daily, but your one, I think actually shows it was a laggard. And in fact, I'm surprised you even held on through yesterday, the last couple of days when it pulled back and it wasn't doing it. What kept you in the trade?
Well, a mix of things. One, I was on vacation, didn't have internet access, so. And then I just
isn't that important sometimes? I think that's great. Yep.
The other one was I just thought I'd ride it out a little bit because I didn't have too much money in it, so.
Okay. See, you've just given really good examples of what we can do as traders and what we can do as position players. We have a number of people who call in, and they are really just quick-term traders. And then we have a whole bunch of people that like to get into a position. They want to do what you just did. They want to get into a position as if they're going on vacation, a Rip Van Winkle position where basically they're in the trade, and that's it. And if they get stopped out, they get stopped out. But basically, they want to stay in that trade, and they want to keep going so that all the noise is out of their way. And I slowly used to do like 1 or 2 minute trades on the E-minis, and then real quick, I'm slowly positioning myself for. I love that. I think it's like playing ping pong and then playing something else where you play real quick and then you play something much slower. And in this particular, you have the same technique. It's basically the same things, except what you do is you have the time to contemplate and not think about it too much. So what I'm looking at in this particular instance is KMX should, now, this is where there's a technique that I teach in the Chapman Wave methodology. This is early in the day, so we can't do all that much in terms of the rectangle that I'm about to post into my chart. But we'll talk about that in a moment, and I'll just give you a real quick way of looking at this and how if it pulls back and then makes a nominal new high, a whole bunch of things could happen, or if it takes out 50 on the support, what things could happen. I'll be right back straight after these messages with Dan North. Ready?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're on with Dan North Trading, and this is what I want to do talk about. Within this 120-minute chart, if you look at I would even go to a 10-minute chart. A lot's going to happen. Let me pull up one of these. I don't know if this is good enough. Okay. What I did want to show earlier, in fact, was in the Chapman Wave methodology, just real quick before I change this particular chart. See this particular bar? This is a 10-minute chart. It happens to have the E-minis. Look, the idea is to get to a peak D, at least a peak D in the Chapman Wave methodology. If you get there, that's when you can start making decisions, even without having a single technical indicator here. There's A, there's B, there's C, there's D, and now you get a sudden spike to E, and look at the big pullback after that. So that's a technique. That's a viable technique. So I just wanted to show it here. Now we're going to change it to the stock KMX, CarMax right there. So what we've got here is from the low, you've got an A, a B, a C, a D. So at this particular point, I would anticipate there'll be a bit of a pullback. At this point, we're looking at a lot. Oh, this is A, this is B. Okay, we're looking at a lot of energy. Every time it pulls back, even just a modicum of pullback, there's buying. So in this particular pattern, I would be looking at, because this entire move gives you a single move up in both the 40-minute and the 120-minute, obviously, I'd be doing something like this. I'd say, okay, that's my rectangle. There should be a pullback. If it pulls back, it must not break under 50.72 today. If it does that, that's not such good action. But if it does that by Tuesday, that's okay. But in the interim, there should be a peak ABCD in the shorter term. We've already got it in the 10 minutes. So if you look at the 30-minute, that could say, okay, 30-minute would be, this is B leg A, now it's pulling back, or maybe this is leg B, I'm not sure. But you want to see it pull back, and then in the 120-minute chart, see the big rectangle that I've drawn? Here I've gone a tad under the low. I like to give it a bit of room, because that's the technique that I like to teach. That says, it could be, if there is a fractionally higher high, about 52.98, that's very positive, because what it's saying is there's a real good chance that you're not going to break the wick of 50.72, the low today, until much later in the week, at least it might even be longer. But what will happen is the 120-minute itself should take an entire week to a week and a half to make a daily peak A, pullback, and then start leg B. And if that happens and you're still in the format that I've spoken about, the 120-minute chart is maybe only C, that's very positive. So let me just sum it up real quickly. Stay in the trade. If at worst there's a big pullback and it takes out 49, that's 3.5 points low. I don't know if you want to give it up, but it's a small position. The reason why I say keep it is you might find that this is the starter position and you want to add to it. So I'd like to keep that in mind. That's kind of what you really wanted. So here's my thinking. Stay in the trade. If it pops up, makes a new high, that's very positive. If it doesn't, then expect the pullback sooner. That's number one. And as it pulls back, don't be surprised if it actually holds the 51 to 50, 51.20, 51.50 to 51.20 area, starts another move. That's probably the best move. If it can move there and start on the 120-minute chart, start a leg B, that's very positive. So use the Chapman wave within that to seek another ABCD to the upside. If it breaks under, as I said, I think I said 49. If it breaks under that, then it might go a little bit lower. I don't think so. This looks like a lot of buying, unless the market turns down next week and drags it down. Hey, nice trade. Congratulations for staying with your plan.
So, Basil, right now you're counting this as a new leg A on the daily and leg C.
Well, I have no choice, but if I was to put anything, because of the suddenness, etc., I'm going to put E/A. Preferably, I'd like to say A, but it's such a big move for a single leg A. I'm being a little cautious, saying E/E. If it pulls back and then makes F/B, that would be very positive. I'd probably say, hey, that's just a B and expect it to go higher, because it's in the right area at this particular time. And as long as the rates remain kind of low, I think they're going to be. It's going to be good. Hey, nice trade. Hey,
Basil, if you get a chance later, maybe you could look at silver a little more in depth, too.
Okay, I'll try to get to that. But thanks so much for calling. Have a great weekend.
Okay, thanks, Basil.
Good. Let's go to Kevin in Safety Harbor, Florida. Hi, Kevin. We're having your weather that you have in the wintertime. We're having it today. Just a beautiful day, very little humidity. How are you doing?
Very good. My question is about Radio Shack. I don't trade it or anything, but I would just like to get your opinion on it's such a strong name and it fell under $1 today.
Yeah, that's a really good question, and I'll talk about it because you're absolutely right. It's a strong name.
Hold on.
Can you hold?
Yes.
Great. Okay. I'll be back straight after this with Kevin in Safety Harbor, Florida, looking at RSH Radio Shack trading at 0.92 down 11.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. We are back, and I just finished the monthly chart of the PT, and then now it's pulling back. All right, so yes, it's a good question, because many of us have looked at Radio Shack quite intently, or been there and or traded or whatever it is, and this is so disappointing. You see, Kevin, I think the challenge to them has just been one that they have not mastered at all. They probably just have way too many. They should have cut back. They should have started fresh. They should have done something that is completely innovative, and they've not done it. And I know I go to Radio Shack for those things that I really need. I probably could get them at other places, but I could also get them online.
I think the question now, Basil, is, who would be interested in taking Radio Shack over just for the name? It's like, I guess you couldn't really compare it to Motorola or anything, but it's just one of those names.
Kevin, would you think of it as the name, or would you think of it as the real estate? You see, it was discussed that as a name, it now has a stigma of being a faltering company. I mean, they've just done nothing right. The chart shows.
Yeah, but there's still, well, like you said, you pick up all the little stuff, and I think the problem is we pick up the little junk, and that little junk just can't support the locations. People are buying the big ticket items.
Absolutely.
But they have a real niche where they are located in neighborhoods where we're all older now, but people of a certain age go in there, and I've been in there when people bring stuff in, and it's like, hey, can you tell me how to use this or whatever?
Yes,
kind of like a point of contact for people for anything electronic.
Or even that stuff that they just have that odd battery size or whatever it is. But you see, that could be the
now they have
person.
that battery store, and that really hurt Radio Shack terribly. They've got those everywhere, Batteries Plus, so that's a knockout on Radio Shack as well.
So I think you've pinpointed a couple of things, but now the real question is, at 90 cents, let's call it 60 cents or 50 cents, is there a chance that something will happen that will spark a move that could be a really big percentage move, but absolutely nothing compared to the trading range that it was in recent times? And I would say to you, I've done this before. We had it in my newsletter at one point. We had it made a little bit of money, and then the next time we did it, it just suddenly dropped, and because it was so low, it turned out more than the 3% that I like as kind of a risk. I think it was maybe 4%, maybe even 5%. It was a small position, but that's not the point. The point is I learned that if you look at the red candles on the weekly chart, they've done nothing right. There's not a single huge green candle that is held in the weekly chart when you go back until you go back to September of last year when all that noise was going on that maybe they had real estate. So I'm going to suggest I would rather look at something really low price, like maybe a gold stock or something that has a very low price as an option, as an interminable option, one that you can you hold it through thick or thin, and at some point that stock will really fly. And if you bought it far enough out, you can make some real money. I
agree with you, but the Radio Shack thing it's still a name that everybody identifies with, and it's kind of a fun bet. I'll probably get like 1,000 shares at 80 cents or something.
Oh yeah, as far as I'm concerned, if you did that, that's the way to do it. That's the only way to do it, and I'll tell you why. Because you don't want to be holding this baby when it goes to 3 or 5 when after they've gone bankrupt and the shares that you are holding are gone.
Right.
You know what I'm saying?
Right. Yeah.
That's the big risk.
Yeah, I'm with you though. I don't really see a lifeline. I don't see them being able to go to anybody.
I don't see the sexiness of anything. Right. Yeah. There's no story. Let's put it that way. There's a story that's become stale, become negated by very bad moves every time anybody thought it was a real estate play. I suspect you're absolutely right. It will become a name in a real estate if somebody does the right thing.
I think we may have really touched on something here with the Battery Plus. That would be a really a huge winner if they could merge with Radio Shack. As a matter of fact, if they could hear that, they might entertain it because they've got the locations in the communities that Battery Plus doesn't have.
Right. Yeah,
but I don't
think you've got a point.
The footprint's big enough, though, for the battery.
That the position that you've got is exactly the right position. You have your portfolio, you have this, and this is lottery money that you say, you know what?
Exactly.
There's such a potential here for something to happen that it's worth putting $800 or $9,000 aside.
It's 800 lottery tickets.
Yeah,
you know
I
what
think so.
It's
Well, I wish you luck, and I'm going to be following it. In fact, I'm going to put it in my notebook just in case you don't call. I'm going to put it for like 3 weeks' time. I'll have another look at it.
I'm going to pull the trigger sometime today because otherwise it'll bother me. But I'll just do it. I mean, I've got a lot of other stuff I'm working on, obviously. But I think you have the right idea. In the oven,
You have the right idea because you got the right attitude to say to yourself, it is a lottery, but I probably would say to you, maybe one more day, but hey, fussing between 20 cents and a 90-cent stock is not a big deal.
Like sending a letter to a pretty girl that you barely know, and will she call me back or not?
Well, there you are. Let's hope she calls you back.
Where it's at. Will Radio Shack give me a call or not, Have
a wonderful weekend. Thanks for calling.
Bye-bye.
That's folks, we're looking at Radio Shack. We've been through this a couple of times, so now that it's under $1, wow, this is something. So, okay, I got a couple of things. I want to get to the question first because otherwise I'm going to end up with trouble. So let's see. Get rid of that. Oh, boy, where's my little mouse? Okay, got it. Got so many computers and stuff around here. Question was, Jim. God, what? I'll find his other question. Oh, that's right. It was UTX and UNH. UNP. Did you say UNP? I think you said UNP. I'll find it as I'm getting the stock price up. So, folks, we're looking at, there it is, UNP. So United This is not United. This is a Union Pacific. Union Pacific Corporation, look at this. If you want, I thought I'd lost the chart. I said, oh, no, don't tell me I've lost all the letters. Actually, it's had a split, and it's trading now at 100.92. The last time I printed a point, back in the letter that you can see here is an E, back in August of 2011, and it must have been somewhere around 104. I love when stocks split, and then you look at them again 6 months or a year later, and look what happens. It's at the same price. No, it's double. And it's walked the 9-period moving average. The MACD is good. The stochastic is good. This is part of our economy, folks. Union Pacific. Now, this is the question. The weekly chart is a spectacular move, and it's got a peak E made today. I know it's made today because 102.96 was the high of last week, and 100.94 is the price it's trading at. I see nothing to spark. I'm tempting fate here. I see nothing. Absolutely nothing to spark a rally today to take it above 102.96. Let's see what happens by 4 o'clock. But anyway, this will be a peak in. It'll be the first peak in quite a while. And each one has had no more than a day or two, a week or two, 3, and then it's gone to brand new all-time highs for quite a while, since the low was made back in November of 2013. So nothing yet wrong in the weekly. But now we get to the daily. And the daily, which I'll have to renotate real quickly. Watch me do it, folks. This is the way the Chapman Wave works. You look for the lowest, most identifiable low bar, and then you merely count each successively higher peak. Well, there's a little variation on that. If there is a peak, if it pulls back but way above, but above the previous low bar that started the whole move, then you've got to count that peak as well. Well, that's also an A. But then B is above. Let's see if it is or not. So on the 22nd of April at 97.08, you get a test at 97.07, missed it by 2 cents. So that's not a B. That is a B, but not a B from that previous one, but a B from the lower A. So I put a plus sign there, and I start the count again. A, B, C. Is that a D? That is a D. Now, is that an instant restart? It is. It has all the qualifications, but that doesn't make it a successful instant restart. You need to see where it's going to go. But it's very positive if it does that. So this is D, and this becomes E/A. This high in June becomes F/B. Now it pulls back, and the MACD and stochastic have pulled back very sharply. That means and price has gone below the 9 EMA. I have no choice but to say that was, in fact, a peak F. And if we use the 120-minute chart, I'm pretty sure that we'll be able to identify that was a pretty serious turn, going from 102.96 down to 99.28. So when we're looking at this is a potential retracement failure. That's why I'm saying oil might be a factor here, even though we're looking at a Union Pacific. Oil and the IYT, and it was Federal Express that really popped the IYT higher the other day, and that IYT hasn't yet gone to an all-time high. So I'm going to be watching these real closely. Now let's get back to UNP. So UNP right now in the daily chart says, be careful. We could have a pullback, and if we break in the next week underneath 99.28, you could see a pullback that takes you to the doji area, that little doji candle right there on the 27th of May at 98.90 to 98.26. Not a big deal, 3 points in a consolidation from here. But it is a big deal because it'd be the deepest correction it's had from the 102s down to that level since the intra-month move back in March from 95.24 down to 90.43, 5% move. So I'm looking at this and I'm saying it's just another little benchmark that I'm using, UNP, to say that there's a chance that UNP could be suggesting that at least in the transportation sector, we could be getting a pullback. So I wanted to also do UTX because that's really important right now. First, we've got George in New York. Hi, George. How are you?
Basil, good morning. How are things today?
Yeah, good. How are you doing?
Very good. Very good. By the way, on the UNP, the Union Pacific, also take a look at CSX.
Yes, I did.
I've been in that since about 24. This had split a couple of years ago, 3-for-1. It's a very good high-growing railroad company on the East Coast here.
Right, owned by Buffett has a big chunk.
No, that's Burlington Northern.
Right, private. Burlington Northern, right.
Yeah, so it's very good, pays a dividend, and it looks like it's in a good phase right now on the weekly and the monthly.
So the issue right now is in the chart formation, the monthly is broken out in CSX. So, all right, let's go back to... All right, so your question is?
Oh, I'm looking at DIG today, DIG.
So there's Ultra Oil and Gas Pro shares on the long side, and I used to have this notated. So it's A, B, C, D in the week, monthly to the April of 2000. High pulls back and it goes A, 53.35, 53.40. Yes, A, B, C, D. Oh, recycle ABC. I don't think this is G. I think this is C in the monthly for DIG. Oh, my. Good. You see, there's a good chance that we're going to get a pullback in the market, not from the Fed, but from overseas, from the oil, from the crisis, from everything that's going on. And maybe that's what gold is telling us. And the weekly is ABC. It's in leg D, very strong, nothing technically weak here. Do you have it already?
You know... I'm embarrassed to say, but I nibbled on this on the low in August of 2011.
Oh,
and I held it. I decided to gamble because this is parallel to XLE. XLE has all the large energy companies.
Okay.
So I decided to take a chance.
Yes, and Exxon, they're actually doing very well.
Yes. So is Royal Dutch.
That's right.
As well as BP.
Right. So I'm just going to say to you on a very short-term basis, this is becoming a parabolic move.
Yes, correct.
So one has to expect that you could even put in that rectangle formation if there's a sudden sharp pullback to whatever the low is. But I've got at 89.48, DIG is up $1.33 right now, up 1.51%. I would make it a little higher. I put it at 90, and I'll draw the rectangle, and that's what my eye tells me, that we could have a pullback. Now, if we have a pullback in oil, that'll help the airlines, and that's what I'm talking about in the rotational aspect of the market. We might see a correction here, but the VIX might not go all that high because of the rotation that you suddenly get, and it would only be a pullback in something like the Chevrons, the ones that make a big weighting on the Dow. And then what you'd find is that the airlines have a bit of a pop here, and as soon as they start to get recognized as doing great, they start to come back down again. And I'm anticipating the airlines, to me, my guess right now is that the consumer is pulling back on most things, but they are spending bigger on automobiles. That's really what's happening. And maybe even that's slowing down a little bit, but that's kind of what I'm thinking.
Right. And also, of course, they still need, fuel is used for a lot of things, whether it be the sneakers, filling up the car.
They need transportation, right.
So
the two kind of go together. Oh, I think you got that DIG. What a fantastic trade. Now, what a fantastic position play. I would be looking this on a trading basis that we might get a little toppy coming up in the next couple of days. But if it gets back to 86, between 86 and 84, that would be a time for a re-entry or add position to. Hey, have a great weekend, George.
Thank you, Basil.
Thank you very much. Good eye, and congratulations.
Thank you.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Whoops, I just did the wrong thing here while I was distracted. Oh, why am I blanking out? The food stock that was on the Dow, and then there was a split. Oh, gosh. No, it was on the Dow. I just don't have my Dow list in front of me. Let's see. No, not Campbell. It was on the Dow. It was on the Dow. Kraft. That's it. I knew I'd get it. I have to go through the alphabet to get it. Kraft. KRFT. That was just the question is, in the den, Jay put in a KRFT, put in a symbol of I hadn't seen this at all. Yeah, Kraft Foods. Look at that. Beautiful. Leg C making all-time highs. Beautiful. And we're talking about what happens with spin-offs. Now, I can't remember now if Kraft Foods is the head and the spin-off is the subsidiary. I can't remember anymore. But what we're looking, the question was DNOW, and the answer is, wow. and he said it's a spin-off of where was it? Spinners, doing too many things at once. There's another one, Mondelez. Oh, that's right, Mondelez. Oh, this is NOV. NOV is. Yep, it started fresh. National Oil Well Varco. It used to be Varco, then it was National Oil Well Varco, and now it's spun off. So I love that stock. I mean, I love the look of the new stock because it's in leg C in the daily. It needs to clear the all-time high, which is just a couple of weeks ago, of 35.62. And that's, I think, what it's going to do. Good eye. I think so. And I think your risk here is that it is an IPO in a sense, but we know that there is a company behind it. And I would just say if you're long, stay long and be a little careful. It pulls back to between 33.88 to 33.62. But so far, I think it's doing really well, and it's something to keep an eye on. About to sneeze, have sneezed. All right, so I forgot there's a little button. I forgot to press the little button. You know, we always have buttons. All right, let's get back to this. So look at GE. GE right now, trying to really, is having a real tough time. I think there's a chance it's going to break that key support area. If it breaks the key support area and it goes under 26.40, I would say, to be safe, let's just say 26. It's at 26.90. It gives back a point in the next week. That's going to be saying, watch out on the long side. If you are long, because there could be a bit of a breather coming up regardless of what the Fed says. And that's the same thing on the weekly chart, because they'll be under the 9-period moving average. Real quick, IBM's looking very poor. It's having a lousy day today, so that's out of the question. But UTX is having a nice bounce, but it's underneath the previous high. It looks like it will make the D in the weekly chart, but I've got an F in the monthly, and if it makes a new high above 120.66, that just says, hey, you don't usually get G's in monthly charts. That's recycled. That's a new C. That'll be very bullish. A closing UTX below, it's at 117.97, up 39 cents. Any close below last month's low bar of 119.19 says, now you've got to be careful. UTX it deserves a breather. It's been going kind of sideways with slightly up. Watch out. And that's UTX. And Triple M had a very nice session earlier. It's still doing well. Looks like it wants to try to make a new all-time high. Who even talks about 3M? Yes, one of the great companies. Look at this chart. We owned it for a while, and then we didn't even keep it. I can't believe it. Way back, sometime, I think it was 2012 or something. Look at this. Even earlier we might have had. And I just keep watching it go up. It's looking very good. But is that monthly in leg F? You got to be real careful at this point if it is. So let me sum it up. Have a great weekend. First of all, stay tuned for Nico and Paige coming up. But this is what I'm looking at. It could be a slide into the close today. If there's a slide today and then a slide on Monday, that says short term, be a little bit careful. On the upside, the close in the 16,820 area is very good.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.